Hey everybody, I'm Ben, founder and CEO of Keystone Bookkeepers, and today we're going to be walking through a balance sheet. Specifically, it's going to be a balance sheet using VR platform, and we're going to look at how we use the locations method in order to get the the ending balance to transfer from trust to operating. So here we got our balance sheet, and as you can see, we've got a couple different locations at the top. PM, which stands for property manager, trust, which is your trust account, and then total, which is just PM plus trust. The PM side, this is going to be balances of any asset, liability, or equity that is associated with the property management company itself. Now, typically, your operating account is a positive number. This example just happens to be negative due to timing on a check. But your operating account is going to be 100% in this PM column because this is funds that belong to the property manager. Moving down, we've got credit cards here. So again, credit cards belong to the property management company. So they're going to be 100% in that PM column. Moving further down, you can see we've got some equity. Here we might have some equity in PM or trust. We've got some reimbursable payments clearing. We've got transfers to and from operating. We'll cover these at the end, but mostly this is going to focus on assets and liabilities and then how we get that transfer amount. Up here in the trust side, we've got our trust account. So this is 100% of that trust account is going to be in the trust column because this fund is actually not the property managers. This actually belongs to homeowners and other stakeholders. Moving on, we've got negative accounts receivable. Now, this is a little bit of a unique thing for VR platform and how we run our trust accounting. It's usually negative because you as the property manager, are receiving funds for reservations in advance of the stay. So what happens in QuickBooks, we create an invoice in the month of the stay. Say we're in December, we get paid now, but the reservation is in July. We will create that invoice in July and assign the payment from today against that invoice. What happens is it actually creates a negative accounts receivable. This is really a liability, but the way QuickBooks works, we leave it in assets under accounts receivable. Again, easy way to think about this $7,400 we're looking at here, these are funds that you've received for future reservations. So we take your trust account and we subtract out those funds to make sure that they are held in your trust account and not paid out, not transferred out. We want to keep those safe so they can be paid out to homeowners when the stay actually occurs. So that leaves us with a total asset balance in the trust account of $23,423. Think of this as your available funds once you've taken out those funds for reservations. Down in accounts payable, this is mostly going to be the payouts to your homeowners for this month. So again, if we're looking at the month of December, we're in February here, so we'll use February. So we owe homeowners $15,378 for the month of February. Nothing in credit cards because that's all in the PM column. Then we move on down here. Now we've got what looks like a little P&L in your balance sheet. And what this is all the owner statement activity. VR platform actually pulls this from QuickBooks and posts these to the owner statements. So every reservation is going to get posted here, typically to rent. We're going to have some channel fees. We might have some cancellations, some resolutions. This is a running total of the life of your company. So remember, balance sheet is cumulative. P&L is going to be 1 month over month. Balance sheet is going to be everything added up together. You're going to see your commissions, your owner expenses, your tech fees, payouts to the owners. As you can see here, we got that $15,378, which ties to up here because we're using something that's only been in existence for 1 month. And then we've got our total owner payables. So in this example, it's 0, which means once we pay that $15,378, don't owe our homeowners anything and they don't owe us anything. If you've got reserve accounts, so if you're holding $500 per property, you're going to see that reserve account show up here in the total owner payable because that is money that you do technically owe to the homeowner. If they were to leave the next month, they would get refunded that back minus any remaining expenses. Conversely, if this is a negative number, that means the homeowner owes you, the property management, money. This might be maybe they had a month where their expenses were higher than their revenue. Instead of invoicing them, you're going to let that negative balance roll forward to the next month. In that case, you're going to see a negative owner payable here. Nice thing is this total owner payable is going to tie to VR platform to the total of those reports, so you can see how they line up. Next, we've got our rental taxes. So here we're going to have all of our rental taxes collected, and then we're going to post any rental taxes paid. If we're not doing your taxes, if you are doing them or maybe Avalara is doing them, they're typically going to be on a cash basis. What that means is there might be a month or quarterly lag where your taxes are adding up and they're paid the next month. Ideally, this rental tax payable is what's owed at the end of the month. So at the end of February, we owe $51.20 for rental taxes collected during the month. So here we've got our total liabilities. We've got our $15,378 that we owe to the owners, and we've got our $51.20 we owe to tax agencies. Totals $15,429.92. So these are funds that we want to make sure are held in the trust account in order to pay out homeowners, tax agencies. So to recap, we've got available funds in the trust account of $23,423 after we take out those future deposits. We compare that against our liabilities of $15,429.92. So that's how much funds we need to pay out our law obligations. And then our total equity, we actually skip down here. Our total equity in the trust account is $7,993. This is the amount to transfer from your trust account to your operating account. What ends up being is it's this total asset number, $23,422.92, minus your total liabilities of $15,429.92. Another way to think about this, at the end of February, you were to shut down your business. No more bookings, everything gets refunded, homeowners are paid out. So at the end of February, you're left with $30,828.53. You've canceled all these guest reservations, so you're going to refund that $7,405.61, leaving you with this amount left in your trust account. You're going to pay out all your homeowners. You don't owe them anymore, or they don't owe you anything else after this. You're going to pay out your remaining tax balance of $51.20, and you're going to be left in your trust account with $7,993, and that is the fund to transfer from your trust account to your operating account. There is another way to get to this number. We can look at the commissions and cleaning revenue for the month. We can look at your P&L, and then we can also take into account the funds that were transferred for reimbursable expenses. So if you're spending money on behalf of an owner on a credit card, that's actually going to get picked up in this reimbursable payments clearing account. Any funds that are transferred to or from the operating account or trust get picked up here. You can see these do zero out. We use them to balance the trust account and make sure we're clear between PM and trust in these columns. But again, end of the day, it's going to be your assets minus your liabilities in the trust account, which is going to give you the funds available to transfer. Great thing is, even if you over transfer a month or under transfer, we reconcile this and rebalance you every month. So this gives you the most up-to-date number of funds available in your trust account. Additionally, this does not take into account any funds that you've transferred after the end of the month. So for instance, if you transferred funds in March, this would not pick that up. So say you transferred $1,000 on March 2nd because you needed some cash in the operating account. So that $1,000 is not reflected in this. So you'd actually want to transfer the remaining amount of $6,993. So I hope this clears up a little bit of the balance sheet questions that I know a lot of people have. And if you have other questions, we're more than happy to answer those directly. Please reach out to your account manager. Thank you.